we need to know what is the stock that you're holding. And by that, I mean, think about it from a fashionability point of view. You know, what is at the really pointy end of fashion, and does that mean it's going to date, because that puts it in a high risk category? Where does it sit from a seasonality point of view? Again, the more extremes from a seasonality point of view can infer more risk. But maybe you've got some good basics and evergreens in your range, in which case you probably don't need to take as quick or as dramatic action. Just because there's frenzy and chaos and panic around you, maybe you don't need to participate. So you don't need to just sort of get swept along with all of that. The other thing to take into consideration is the age of your stock, where your size profile is sitting, if you've got already a fragmented size range. All of those things are important to consider in terms of what do you actually own. So I encourage you to take a look at your stock and segment it, so you can get a read on that, and then look at how much is sitting in each of those buckets. And by how much, I'm really talking about the volume, you know, how many units and what does it translate to in value? And where is it? So, you know, do you own it? Is it sitting in a 3PL? Is it out in your stores or stockists? Is it on order, which effectively does still mean you own it. You just don't have your hands on it yet, but from a financial point of view, you are committed to it and have some obligation there. And then the last point there is, what is it worth? And I'll revisit this a little bit later on, but it is a really important thing to work through. And it's different to how much do you have. So by that, I mean, if it's already aged, or if it's in one of those high risk segments, or if your size range is already broken, the question of what it's worth is probably less than its ticket value. And even if you have a lot of it, and it's not something that you would normally then think should be going through to markdown because it still has a lot of potential in it, I'm going to revisit this, but I really urge you to start thinking about it in terms of what is its true selling potential. Because you really need to have a clear read on that to understand how well is it going to support you, whether trade picks up again in the next month, 6 weeks, whether it's 2-3 months or longer. And you know, things are starting to look a little bit more encouraging, but we just don't know. Having a really clear understanding of your stock and creating some scenarios as to, if you continue trading at the same rate and things kind of pick up in 6 weeks or 8 weeks, what will that mean for that stock profile? How much will you've worked through, and how will your buckets have changed of what is good saleable stock for that time period versus what is potentially problem stock? And stay on top of that, because having that good stock read and understanding of what can it actually do for you from a productivity point of view is going to help you make decisions which are going to be quite frugal decisions about what can you invest next. So you don't want to over assume what your stock can do for you. Think that you don't need to invest much more in a new range offering, and that when things sort of return to normal, the stock that you've got will be okay. Maybe it won't. You need to put a really good lens against it and figure out if it will, because otherwise, when everything does go back to normal and stores are open and people are out shopping, if you haven't been honest with yourself about your stock, it's not going to work for you then. So that's the evaluation process that I encourage you to work through at the moment. And that will help you determine what is the most correct course of action at different time frames into the future.